If you've ever scrolled through social media and seen people making money online through trading and wondered, how does this actually work? This video is your full beginner's guide. Online trading is one of the most accessible and potentially profitable ways to earn income from home, but it's also one of the most misunderstood. So let's break it all down. Trading simply means buying and selling financial instruments like stocks, forex, cryptocurrencies, or commodities such as gold and oil. You do this using platforms like Robinhood, MetaTrader, Binance, or others depending on what market you want to get into. The basic idea is to buy when the price is low and sell when it's higher, or in reverse, sell when it's high and buy it back lower, a strategy known as short selling. Now, can you actually make money doing this? The answer is yes, but it depends heavily on your knowledge, discipline, and strategy. Some people trade to earn a little extra on the side, pulling in $200 to $500 per month, while others eventually go full-time and make thousands. But let's be realistic. This doesn't happen overnight. In fact, most beginners lose money at first because they jump in without understanding the fundamentals, don't have a trading plan, and ignore risk management. That's why this video is designed to walk you through every step, so you can avoid common mistakes and actually build a path toward consistent profits. So, what do you need to get started? First, you need to choose a market. If you're interested in traditional companies, go with stocks. If you're looking for a fast-paced global market, forex, or currency trading might be your thing. If you believe in digital assets, crypto could be the right space. Each market has its pros and cons, and it's worth doing some research to find what fits your goals and risk tolerance. Second, you'll need a trading platform. For beginners, Robinhood and Webull are good for stocks, MetaTrader 4 or 5 is commonly used for forex, and Binance or Coinbase is ideal for crypto. Most platforms offer demo accounts, which allow you to practice with fake money in real market conditions. And trust me, you should start with a demo account. This lets you test strategies, learn how orders work, and build confidence without the stress of losing real money. Then, there's the question of how much money you need. Contrary to what many think, you don't need thousands of dollars to begin. You can start with as little as $100, especially if you're just testing the waters. The important thing is to treat it like tuition. You're paying to learn. Now let's talk about education, the most important part of becoming a successful trader. Trading isn't about luck, it's about having an edge. That means learning how to read charts, recognize patterns, follow news that moves markets, and most importantly, manage your emotions. There are plenty of free and paid resources available. For Forex, a great free resource is babypips.com. It teaches you everything from how the Forex market works to detailed strategies. YouTube channels like the Trading Channel, Rainer Teo, and Humbled Trader offer high-quality tutorials and breakdowns. Don't just watch. Take notes, practice what you learn, and revisit concepts until they click. One of the easiest traps to fall into is jumping from strategy to strategy without fully mastering any. Start with 1 or 2 basic approaches and get really good at them. So what are some beginner-friendly trading strategies? Let's start with trend following. This is when you identify a clear direction the market is moving, either up or down, and then you ride that trend. You use tools like moving averages to confirm the trend, and you only trade in the direction the market is going. Another simple method is support and resistance trading. This involves identifying levels where the price has historically bounced up or down. You buy at support and sell at resistance. Then there are candlestick patterns, visual clues that tell you when a price might reverse or continue. For example, a bullish engulfing candle often signals that buyers are stepping in. These strategies aren't guaranteed to work every time, but they give you structure, which is better than guessing. Also, technical indicators like RSI, Relative Strength Index, or MACD can help confirm signals. But be careful. Don't overload your charts with too many indicators. Keep it simple, especially in the beginning. Now let's dive into the most overlooked part of trading, risk management. This is what separates profitable traders from gamblers. The number 1 rule is, never risk more than you can afford to lose. A good guideline is to risk no more than 1 to 2% of your total trading account on a single trade. So if you have $500 in your account, you should risk no more than $5 to $10 per trade. This might seem small, but the goal is to survive long enough to learn and grow. You'll also want to use a stop loss. This is an order you set so if the trade moves against you, it exits automatically before losses get out of control. And just as important as knowing when to get in is knowing when to get out. Don't let greed make you hold a winning trade too long. Set a target, stick to it, and walk away. These small habits compound over time and can turn an inconsistent trader into a consistently profitable one. As you start trading, one of the best things you can do is keep a trading journal. After every trade, write down why you entered, what happened, how you felt, and what you learned. This helps you identify patterns in your decision-making, both good and bad. Maybe you realize you make better trades in the morning, or that you rush decisions when you've just taken a loss. The point is to become more self-aware and use that awareness to improve. You should also make time every week to review your trades, even the ones you win. Ask yourself, did I follow my strategy? Was the risk worth the reward? Could I have managed this trade better? This constant review process is what makes you better over time. Finally, surround yourself with other traders. Join trading communities on Discord, Reddit, or even Telegram. You can learn a lot just by seeing how others approach the market. Be careful who you follow though. There's a lot of hype and misinformation out there, especially on social media. Avoid anyone promising guaranteed profits or secret systems. If it sounds too good to be true, it is. Stick with traders who focus on education, realism, and discipline. Trading can be a lonely game, especially when you're just starting out. Having a community to share wins and losses with can keep you motivated and focused. So to wrap it all up, trading is a real learnable way to make money online, but only if you treat it like a business and not a lottery ticket. Start small, invest time in learning, stick to simple strategies, manage your risk, and never stop reviewing your performance. Most people quit before they get good. But if you stay consistent, keep learning from every mistake, and show up every day with the goal of improving, you can build a real income stream through trading. If you found this video helpful, hit that like button, subscribe for more beginner-friendly financial content, and check out the links in the description for free resources to help you start your trading journey. Thanks for watching, and remember, trade smart, stay patient, and trust the process.